Catching a reversal can feel like spotting a needle in a haystack until you know exactly what to look for. In this video, I'm breaking down the key signs of a high probability reversal so that you can stop chasing price and start trading with confidence. So when I look at trading a reversal, there's a few things that has to fall into place. It is a certain reversal sequence that has to take place before I even consider taking a trade. Now, what is that reversal sequence? First of all, I've drawn out here what looks to be a fair value gap. Now, if you do not know what a fair value gap is, I do have a lot of videos talking about them. I do have an in-depth tutorial video on fair value gaps, but just in a nutshell, what it is a 3-candle pattern where we have candle number 1, candle number 2, candle number 3 that leaves an inefficiency in price. We can see candle 3's low doesn't touch the wick high of candle 1, leaving this gap in price. So why is this important? Well, the very first thing that always takes place in a reversal is an inverse fair value gap. Now remember, this is a bullish fair value gap. If the market is bullish, we want to see bullish fair value gaps be respected. But if the market is reversing from a bullish environment to a bearish environment, we want to see bullish fair value gaps get disrespected. So what does that disrespect look like? It is a candle that closes through the fair value gap, because remember, if we are bullish, we're going to tap the fair value gap and we're going to trade away from it. So we're either going to tap it, close above the consequent encroachment, or tap it, close above it, and then we are going to trade away from it. But if the market is reversing and we are bearish, we are going to go ahead and close through this bullish fair value gap, inversing it, and then we're going to seek sell side liquidity. So we go from a bullish environment down to a bearish market environment. The next thing that's going to take place is we are going to see a change in the state of delivery. Now, if you do not know what that is, a change in the state of delivery is what I've drawn out here. It is the formation of an order block. Here we can see price action started trading down. We made lower lows and lower highs. Just going to do that again. Prices started trading down. We have made lower lows, lower highs, lower lows, lower highs, and then we have a turtle soup. Remember, a turtle soup is just a sweep of liquidity. That is all a turtle soup is. It is a trap. So we have that sweep of liquidity, and we have 3 consecutive bearish candles that took out this low. So here we have our liquidity. We've got 3 consecutive candles that took out the low. Our order block forms as soon as we close above the opening price of these candles. So where would that opening price be? It is the opening price of the very first bearish candle. That is the start of this order block. So I want to see prices close above that opening price. This is my change in the state of delivery. This is also my creation of this bullish order block. So as soon as this order block gets formed, we can anticipate prices to retest that order block, because it is a culmination of large players look orders, and we can see prices trading away from that order block. That is the second thing that will always take place in a reversal pattern. We can also see here, what do you spot? If you remember what I taught you here, we have that fair value gap that got inversed if this candle goes and closes below it. And if you look here, what do we have? We have this bearish fair value gap that got closed through. So not only do we have a change in a state of delivery, we also have this inverse fair value gap. So that is a strong reversal signature that we are going to trade away from it. It is important to note that this candle doesn't have to be one candle. It can be 2 or 3 consecutive bullish candles. As long as we close above these down close candles, that is my change in the state of delivery. The third thing that's going to take place is we are going to get a market structure shift. If you do not know what a market structure shift is, it is just a body candle closure above the high that made the low. So if we are in a downtrend, we are making lower lows and lower highs. Where would our market structure shift point be in this example? It is when we close above this swing high that made this swing low. So as soon as this market runs up and closes with a body above this high, that is my valid market structure shift. So we get that as well. This is a very good place to start looking for a reversal trade to take place. Something else that we do have is we do have these up close candles from the low that made the lower high. That is my breaker block. So we can go ahead and draw out our breaker block, and then I'm just going to remove that. If we do have a fair value gap inside of that breaker block, what is that known as? That is known as our unicorn entry model. So then we can look for that unicorn entry model, and then we can trade away from it. So now that you know the reversal sequence that has to take place from that inverse fair value gap to the change in the state of delivery to the market structure shift to the breaker block being formed, and then we can look for our entry, where do we actually look for that reversal sequence to take place? Now, remember, if the market is ranging, reversals take place at highs and lows. So every time we sweep out a high, we can start looking for that reversal because the market reversals takes place above highs and below lows. So over here, we can zoom into a lower time frame, and then we can look for our reversal sequence. Somewhere else that we can start looking for reversal sequences is if the market is trending, we can look for bullish PD arrays. Remember, I said that in a bullish environment, we want to see bullish fair value gaps to hold and to support prices higher. So over here, we can zoom in, and then we can look for our reversal sequence on a lower time frame to target this external liquidity, which will also be the completion of this market maker buy model. Something else, somewhere else we can start looking for reversal signatures is we can look for reversal signatures at opposing candles. So we have this area of opposing candles, which is also a demand zone or an order block. That is where we can look for our reversal sequence to start taking place as well. And then we can look for opposing draws on liquidity. That can be internal range fair value gaps in this leg. It can be this old external swing high. So now that you understand what do we look for in a reversal and where we look for reversals, let's dive into real chart examples so that you see how we put all of this together to form a model. So in this chart, we are on gold on the daily time frame. We can learn a lot of what I just spoke about. We can see that if we look over here, the market is expanding and we are in a very bullish market environment. So now if we look here, we can see that we have this very nice expansion candle, and which leaves what? We leave a bullish fair value gap expanding away from this opposing candle, expanding away from this order block. So we are in a bullish market environment. If we continue bullish, we want to see what? We want to see this bullish fair value gap support prices higher. This market trades into this fair value gap. We found support and we trade away from it. Now, after doing this, what happens? We form new bullish structure. We form a new bullish fair value gap, and we see what? This market trades into it. We found support and we traded away from it, leaving this opposing candle. Then what happens? Then this market trades back into that opposing candle. We respect it and we trade away from it. But now what happens? Every time we traded away from a bullish PD array, we formed bullish fair value gaps away from it. Now we get here. Now we haven't formed this bullish fair value gap away from this PD array. Instead, what happens? We fail to take out this high and we close back through these two opposing up close candles, which to me is a sign of a weakness. So now what happens? We draw out this range high, and we can go ahead and we can draw out this range low. So now we are stuck in this range. Now, how do I know to start looking for reversals? Because we do not form bullish fair value gaps out of PD arrays. And why is that important? Because here we do have that bullish fair value gap. But did this low trade into a PD array? It didn't. If this candle, if that wick took out this swing low and then we formed this fair value gap away from this PD array, I would have looked for a continuation trade higher. But we failed to take out this low, so we have failure swings here at the bottom. So these failure swings will act as my draw on liquidity. So that is going to be my draw on liquidity. We have failed to take out the low, and here we have that swing low. This fair value gap, even though we have respected it, it isn't valid because it is not formed out of a PD array. So now what happens? Now we have taken out a swing high again. Remember I said reversals takes place above old highs and below old lows. So now we have taken out the swing high again, and this daily has closed below it. So we have failed to displace higher away from the swing high. That is where I drop to my 60-minute time frame, my 1 hour time frame, and this is where I can start looking for my reversal signature. So if I go back to where we sweep out that high, let's have a look at how prices form. We can see that we do have our draw on liquidity here at the bottom, this failure swing, and we do have that daily swing low resting right below it. So I'm going to leave those 2 points of interest on my chart, and let's see how the market reacts to these highs. So here we do have that swing high. We trade into it with one up close candle. So as soon as we close below this one up close candle, that is what? That is my change in the state of delivery. But before that change in the state of delivery happened, what happened? Here we have that bullish fair value gap, and we disrespected it. We closed through it. So that becomes my inverse fair value gap. With that inverse fair value gap, we do form that change in the state of delivery. If we are going to form a market structure shift, we want to see the swing low that made the swing high get broken. So that is this swing low. We want to see a body closure below this low. Let's see if we get that. We start trading lower. We haven't gotten that body closure yet. So now we have 2 bearish PD arrays, and we still need this market structure shift. We also do have this breaker block that formed from the high down to the higher low, up to the higher high. These bearish candles, that is my breaker block, but I'm just going to delete that. And in that breaker block, what do we have? If I remove this as well, we do have this fair value gap that we can also use as a target or an entry point to trade lower. So let's see which one happens first. Are we getting an entry or are we getting that market structure shift? Do you see in this case, we get the fair value gap tap. So either you could have taken an entry there at the retest of the fair value gap, stop loss goes above the high, and we target opposing candles. So here we have our first target, these relative equal lows for a 1.41, and then we can pull that down to this target, these lows, and then ultimately my long-term target will be this failure swing. So that is one way of doing it. Another way of doing it is taking a retest of that fair value gap, and you can just see just moving your target, your entry price higher increases your reward to risk. So the reason why I share with you the reversal sequence is so that you can go ahead and you can pick one to focus on. You're either going to focus on a change in the state of delivery, or an inverse fair value gap, or a breaker block, or a market structure shift. So you can see there's so many PD arrays that can form a reversal forming off of an old higher low or an internal range liquidity. I prefer to use change in the state of delivery or order blocks. That is my personal favorite. So here we can see I have marked out this order block, this single up close candle that took out liquidity. And let's see if we do get that market entry. The price action trades higher. We do get that entry tap into our position and we let this run. Here we can see we finally get that body closure below the low of this market structure shift. So we do have a valid market structure shift now as well. So more often than not, the market structure shift happens last. Now, we can look to take targets or partials at these relative equal lows here. So let's wait for the market to run through them. We do have a partial taken at 2.5 R, and then we can take partials at this low, and we can take all targets off, all positions off at this swing low here. So let's see if the market does in fact run down to hit a full TP. It takes some time, but we do eventually get there, and that is how you can frame a reversal signature. So now if I go back to the daily time frame, what do we see? Looking back at the daily, we see that we have this swing low formed out of a PD array, out of this opposing candle. So if I mark that out, that is my new point of interest, and I'm going to wait for the market to trade through this point of interest. So dropping back to my 1 hour time frame, here I have the daily swing point, my daily point of interest, and so let's wait for the market to run through that area of price action. Here we go, we do tap that area of price action. We do have 4 consecutive down close candles, so as soon as we close above that, that is my change in the state of delivery. Do we have a fair value gap? We do, so we can invert this fair value gap first as well. So let's see what happens. We respect the fair value gap and we trade lower. Now we sweep out a new low. So my change in state of delivery moves down to these up close, down close candles. Here we also have that fair value gap that has already been inverted, but it's very important to note that you always want to pair 2 or 3 of these confluences with each other. If you just take an entry based on that inverse fair value gap, target 2R, let's see how that plays out, you would have lost the trade. So it's very important to pair these confluences with each other. Now we trade lower again, and we do have this run of 4 consecutive down close candles. We do sweep out this low, and we do have another fair value gap. Let's see if price action can in fact invert this fair value gap. There we go. Now we have inverted it. So again, like previously, that can be an entry there, but it's best to pair it with another confluence. So we do have our inverse fair value gap. We do have that. Let's see if we get that change in the state of delivery. We do. In fact, we get the change in the state of delivery and we get the market structure shift. Now, I would have taken my entry on the retest of the change in the state of delivery. Remember, we have a couple confluences that's playing ball here with us now. So we do have that change in the state of delivery, and we do have this inverse fair value gap. So we have 2 confluences showing us a bullish momentum. Something else is we do have a market structure shift, and we have this breaker block resting over here. So overlapping that breaker block, do we have a fair value gap? We do. We do have this fair value gap that overlaps the breaker block, and so you can take your entry at the retest of that fair value gap, or at the order block, or at breaker block low. You can also wait for this balanced price range to get tapped in again, but I take my entries on the retest of the order block. Do you see how quickly you can pair up bullish points of interest to take that buy? So let's see how this trade plays out. So here you can see we do tap lower. This is very confusing, so let me explain. We do trade lower into the stacked POIs, the breaker block, the fair value gap, and the order block. We do trade into it, and price action respects it. So I normally just wait for an inverse fair value gap and a change in the state of delivery to confirm my reversal. We have first targets at this high for a 12188. Then let's see second targets. We can go for that high, this high over here, and final targets will be these failure swings at the top. And if I just remove this bar replay, we are stuck in this trade in a consolidation. Just to show you that price is fractal and it doesn't matter the instrument that you trade, these concepts applies to every single asset, every single time frame. It's called being fractal. Now we are on GBP USD on the 1 hour time frame, and what do we see? We sweep out this low, and trading away from this low, what do we form? We form this bullish fair value gap. The price action trades into it, and look at that body respecting that fair value gap, and we start trading away from it. But in price trading away from it, we do not form bullish fair value gaps. So that can be a sign of a reversal that's incoming. Then we go ahead and we sweep out these highs to the left. So we do take out buy side liquidity. Now let's see what happens at these points of interest. Remember, from the 1 hour we drop to the 5-minute time frame. Here at the 5-minute time frame, we can see that bullish fair value gap supporting prices higher. We take out this high, we take out this high, and we haven't taken out this long-term high yet. So in a case like this, I would rather wait for the long-term high to get taken and then look for a reversal, because that can be a potential turtle soup. Now, do we have a bullish fair value gap in the way into this liquidity? We do, yes. So here we get that. If we close below it, that is my inverse fair value gap. We can see this fair value gap supports prices higher, and we take out this long-term high to the left. So we have one single up close candle. As soon as we close below that, that is my change in the state of delivery. We do have these two down close candles, so that can become a potential breaker or block. Let's see how price action reacts. We struggle at the highs, we start trading back lower. Let's see if we do get this close below. There we go. We get the close below. So we do have our valid change in the state of delivery. Now, we do also invert this fair value gap. So we have an inverse fair value gap as well. And we do have these two down close candles that makes our breaker block. In that breaker block, we also do have this bearish fair value gap. So you see how in this small piece of price action, we can really pair bearish points of interest on top of each other to really form a high probability trade. So you can either take your sell on the retest of the order block, stop loss goes above the high, target 2R for your first TP, or you can take an entry on a retest of that fair value gap. In this case, we do have this breaker block overlapping a fair value gap. So I'm just going to remove everything to show you. Here we have that fair value gap. Here we do have this breaker block. So we see that overlap there. We can take an entry on the retest of that fair value gap because this is a very nice unicorn setup. We do get that tap in, we tap that fair value gap, and we start trading lower. Let's see if we hit our first TP. We do hit our first TP for a 2R gain. That is where you move your stop to break even and you look to trade to all points of interest. So here we have this low. Let's see if price action does reach that low. Remember, our stop loss is at break even at this point and we are just running risk free. We do go down to take out that low for a 3.56R trade. Playing price forward, here we are at a live market at the moment, and this would have been a very, very nice trade. I hope you can see how simple it is to pair these reversal sequences together and to build a bearish or bullish points of interest pool where price action can reverse from. Remember, we have to build a story around our trade. We can't just take a sell. We need to know why are we taking a sell? What are pointing in the direction of us taking that sell? Guys, I hope you enjoyed today's video. I hope you see how simple it can be to trade reversals. I personally love trading continuations. I find it easier and a little bit higher accurate. If you do enjoy my style of teaching and you do enjoy the content that I do release, please leave a comment, leave a like. It does help the community grow a lot. If you are looking for a trading mentorship that is a no BS guide on everything you need to become a profitable trader in a very short amount of time, go ahead and check out the mentorship program linked in my description below. It is not just a course, it is a complete step-by-step guide where I take you on a journey to profitability. I review trades, I show you where you can improve your trades, and you trade alongside me, a professional trader for over a decade. I am a six-figure trader, I am a full-time trader, so I know what I'm talking about. And I am very confident in my abilities. Do not waste my time, and I will surely not waste yours. Guys, I do hope you have a great day, and I'll see you in the next video.